Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Nancy Pelosi and George Clooney deliver new blows to Biden's re-election bid, as well as that top ECB official sounds alarm on rising risks from shadow banking. We've got lots to talk about on the charts. Also, we've lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. But the first article to talk about is to do with Nancy Pelosi and George Clooney. Now, Joe Biden has just been hit with two large blows from the veteran Democrat Nancy Pelosi and popular actor George Clooney. These blows have come following such individuals stating that Biden needs to be replaced as the Democratic Party's presidential candidate. Now, of course, this has been the key topic within politics. It seems like we're talking about it every single day, over the past few weeks. And of course, this is all following, last month's debate between Donald Trump and Joe Biden. As previous to that debate, we had been talking about the election, but really not at the same intensity as we're kind of talking about it now. Why that is? Well, ultimately, the kind of primaries had somewhat come to an end. We kind of had our candidates, it's felt like, that being Biden for the Democrats, who had really won unanimously. And then we also had Donald Trump, who obviously fought off some other candidates within the race, but we kind of always knew that Trump was the favourite and was going to take it home. So, Nikki Haley and Vivek Ramaswamy and, of course, the others within that debate, within that kind of candidate race were kind of there, but it wasn't really a worry for Trump, it felt like. So ultimately, we covered that, but not to the same intensity once again as this. Now, of course, that debate which took place between Trump and Biden has taken place very early in the kind of election cycle, it does feel like. If we kind of think ahead and think about when the election actually is, well, that's November. We're kind of talking about the election with this intensity in July. Pardon me for the kind of black line there. We're talking about this election with such intensity in July. And even, last June. So ultimately, we are kind of starting off this election cycle quite early, it does feel like. And ultimately, one could question whether, the kind of Biden health issues is a part of that. The question of whether, maybe some of those kind of key Democrats, which as we'll come to, that are more so worried to do with Biden's presidency, or the fact that he is going to be the Democratic candidate, maybe the fact that some of those individuals are so worried is why they wanted this debate to take place so early, so that people could kind of recognize that Biden isn't fit for office anymore, and maybe a younger, more charismatic candidate can come in and actually possibly lead the Democrats to a victory. As we do know, of course, that the Republicans have been leading in the polls, or at least Donald Trump has been leading in the polls, previous to this debate, and now following the debate, of course, the kind of key battleground states, which really matter in these US elections because of the electoral system, and the kind of way that does work. Ultimately, those key battleground states, in those battleground states, ultimately Trump is leading, and following that debate, Trump is leading by even more a margin than he was already. And so at the moment, it's kind of looking like a Trump landslide, and therefore, we're kind of looking at people like Biden, and we're looking at the rest of the Democratic or the rest of the potential Democratic candidates, and as other key Democratic figures within Congress are saying, ultimately they're looking at that and going, maybe we need a better candidate to move in, and then even if we lose, ultimately we've still given it our best shot, because at the moment Biden's not going to give it his best shot because he just can't. Ultimately, he is kind of too old, it does seem like, to really go at this presidential race at the same intensity that you really need. As ultimately, many voters are kind of already very disillusioned, very upset and disappointed with the Biden administration, despite possibly, the statistics showing that Biden has been successful in bringing inflation down from the levels which inflation did rise to during his presidency, but ultimately in other areas of the economy as well. Ultimately, data has shown Biden has fared quite well, and what kind of key Democrats are saying is ultimately that key voters aren't thinking that. key voters aren't feeling that when they go to the petrol station or the grocery store. Obviously, they're not feeling the kind of lower prices that they obviously were feeling when Trump was in power. And as a result, they're supporting Trump just based on the economy alone, which really does drive elections. And so as a result, is it really wise to keep Biden in power here, keep Biden in the race when it just doesn't look like it's going to perform well? And now we're hearing, of course, from Nancy Pelosi and George Clooney, who, of course, Nancy Pelosi in particular is very, very important to the Democratic establishment. Obviously, has a long career within Congress, especially, representing in the House of Representatives as the Speaker of the House. And ultimately, the kind of authority that comes with that means that her voice matters greatly when we're kind of talking about primaries and we're talking about who's going to be the candidate and that kind of thing. So, whilst in yesterday's morning market briefing, we were talking about how maybe, this is blown over somewhat for Biden, and Biden's now on a better track as he has kind of reclaimed some of the rebellion which has taken place against him. But now, of course, we're seeing this new news from Nancy Pelosi, which is kind of, pushing the opposite message, which is that Biden should actually drop out in favor of a new, possibly younger candidate. Now, these comments are of extra significance since only a month ago, both Pelosi and Clooney hosted a huge fundraiser for Biden in California. These comments from Clooney and Pelosi obviously come following Joe Biden's catastrophic debate performance against Donald Trump last month. Since the debate with Trump, Biden has been fighting an uphill battle with the Democratic establishment to prevent a rebellion against his Democratic presidential candidacy. Biden has continued to repeat to individuals across the US on multiple interviews and media appearances that he is determined to carry on with the re-election campaign. He has made some gains amidst the campaign and has secured the backing now of numerous powerful congressmen and women who are within the Democrats. This move by Pelosi now somewhat changes the game, however, and exposes a very deep unease amongst the most powerful and well-established Democrats. George Clooney dropped his backing from Biden in an opinion piece for the New York Times, in which he stated that he loved Biden, but this one battle, Biden would not be able to win. He also made an interesting reflection when he said that when he held Biden's fundraiser a few weeks ago, he saw the Joe Biden not of 2020, not 2010, when of course Biden had strong performances as the vice presidential, candidate, and then also obviously as the presidential candidate in 2020. Very interesting comments there from Clooney and Pelosi, and really over the next few days, over the rest of this week, we're going to see the fallout of these comments, and we're going to see whether these these high value Democrats and their comments, whether that's going to affect other Democrats to start defecting and rebelling, as we've seen previously. So definitely keep your eyes on this topic. Obviously, we'll make sure that you stay updated, but ultimately, you're going to have to keep your eyes on it, as this is going to be something that's coming out, throughout the days ahead. Next article to talk about, though, is to do with the ECB and the topics of shadow banking, systemic risks, and that kind of thing. Now, a senior ECB official has now said that the exponential growth of private funds and other sources of finance outside of regulated banks is the biggest threat to stability. This comes as Elizabeth McCall warns of such forms of financing posing a dramatic threat to the stability of the Eurozone's financial system. Now, we don't usually go into this much, possibly this kind of much depth when we're talking about key systemic risks and what that might be, but obviously we still cover these key risks which are facing economies around the world. And ultimately, of course, the Eurozone economy is one which is very important to always stay on top of, just because of its significance to the world, but also, of course, because it's of great interest to those that are trading the euro or any other euro related assets. And so that's why, of course, we are covering this topic. Now, it is interesting to hear these comments obviously around a topic of shadow banking and systemic risks, as we have heard some kind of interesting comments made on this topic, especially regarding systemic risks as we've come out of COVID and the kind of entire global financial system has changed somewhat. We've definitely started to see the fallout in certain sectors of finance coming out of lockdown, especially as we saw, I believe, with the Silicon Valley Bank,
over in the US, but we've also seen some issues arise in the eurozone as well, with Credit Suisse and that kind of thing. So certainly there are issues within the kind of European financial system. It does seem like, coming out of COVID, coming out of this kind of period of turmoil, and as kind of whilst the end is starting to look nearer, ultimately times are still tough, especially for kind of these large financial institutions that are facing large interest rates and other kind of financial issues. And therefore we have to keep our eye on all these risks which could pop up and start to cause certain things to collapse or certain things to grow and that kind of thing. So that's why this topic is, of course, of such importance. And this kind of topic of shadow banking is obviously very interesting to kind of look into and better understand, as the name does kind of suggest it's kind of less obvious nature, and therefore it's kind of interesting to delve deeper into this kind of topic, which maybe on the surface doesn't show itself, but when you dig deeper into the kind of financial underpinnings of the European system, that's when you can really start to see what the issues might be within the banking sector and that sort of thing, with these non-bank financial intermediaries holding 42.9 trillion euros worth of assets in the EU. These financial intermediaries are often termed as shadow banks, and has experienced dramatic growth when you consider that the traditional lenders only held 38 trillion euros last year. Her key concerns were surrounding the fact that these shadow banks operate outside of the banking supervisory and regulatory perimeter, and therefore systemic risks are high. Ultimately, these risks have materialized very suddenly, as already with the collapse with the family office Archegos Capital Management, which took place 3 years ago. She did say, however, that the European banking sector has proven very resilient recently. Now, this official in particular is, of course, the only US official within the kind of ECB board, and that's obviously a kind of interesting thing to note there. But that's all to talk about on the articles, of course. Next, talk about, like always, is the charts, where we're starting on the US 30, talking more broadly about US indices, just as always, basically. Now, we have seen actually some interesting action play out on the US 30 over the course of yesterday, and this is obviously in stark contrast to what we've really seen over the past few weeks, past few days, where, as you can see, prices really stalled out. Not much has happened, and the markets have basically moved sideways. Arguably, you could probably still say the markets have trended somewhat to the upside still, but ultimately we haven't seen these dramatic swings or and sell-offs and massive surges to the upside as a result of key economic data. Instead, we've just kind of seen maybe some consolidation, then a spike to the upside, but spike immediately to the downside once again, and bouncing off these kind of key liquidity zones that we have noted out. Now, what happened over the course of yesterday, though, in comparison, is of course that price has, or the US 30 has dramatically swung to the upside. Now, it is important to, of course, know that we did receive a Powell speech yesterday. There was nothing kind of particular, though, to note for the article section there, so we didn't cover that, but that is obviously something that could have affected the Dow Jones. But ultimately, this swing to the upside has now pushed price above this key liquidity zone that we had noted out. And obviously, that key liquidity zone has proved very significant over the past few weeks, with, on the 24th of June, we saw a key sell-off from that level. And then also later on the 8th of July, we saw a sell-off once again from that level. So clearly that zone is, a key area of sell-side volume, sell-side liquidity, and therefore, kind of price breaking above that, pushing through it without kind of any issues, is a massive thing to note, of course. Now, the question will be whether price can remain above this key liquidity zone, or in fact, will we now see, just as we saw before, a sell-off to the downside, and possibly, this move above this key liquidity zone is just a process of slippage, as we've spoken about previously on this when we're talking about the charts, which is obviously the situation where price is reacting to that key liquidity zone, that key resistance level, but ultimately as a result of kind of the non-centralized nature of many of these markets, ultimately you can often find price pushing above levels which you would usually expect the reaction from, but still the markets still react in the way that you would expect the reaction, but not at the key price level that you expect it, just maybe slightly above or slightly below. That's the slippage movement. So definitely keep your eyes on the Dow Jones. It's very interesting to see how this is playing out, and it will be very important to see where the price can stay above that key liquidity zone. Next to talk about though is the dollar, which has now finished this kind of retracement and is now selling off to the downside, following, of course, this massive swing to the downside that we saw take place over the entirety of last week. We've spoken about that extensively though, so we're not going to go over it again, but essentially what we saw was that, that large sell-off out of this kind of bullish flag, or not bullish flag, pardon me, this bullish rally that formed to the upside, and ultimately price broke out that level after reacting to a key Fibonacci retracement level, kind of forming this forming this head and shoulders pattern, and then selling off to the downside, breaking below that and pushing below key liquidity zones which price had previously reacted to. So we had a lot of sellers momentum, and what we've seen now play out over the course of yesterday and even over the course of Tuesday as well is obviously, on Tuesday we saw that move to the upside. Even on Monday, we kind of saw the markets prepare for that move to the upside. Then on Tuesday we saw that move to the upside. And now over the course of yesterday, over the course of Wednesday, we've seen price react to that key liquidity zone, which has previously acted as a strong level of support, now acting as a strong area of resistance, and we've seen price sell off quite significantly now from that key liquidity zone, and we're now in the process of basically moving to the downside in quite a significant fashion, as you can see right here. And the question will be now whether price will continue that sell-off to the downside and make its way down to possibly these lower levels of liquidity that we've previously noted out. But obviously that's very far away, and so it'll be it'll be very interesting to see whether price can just continue this massive sell-off. And obviously this is all amidst the kind of comments that we've heard recently from the Fed, especially Jerome Powell in his testimony regarding, of course, the topic of interest rate cuts, where, as we noted in yesterday's morning market briefing, he did say that a rate cut is far more likely than a rate hike. So possibly that's the markets now pricing that in. So definitely keep your eyes on the dollar. Next to talk about though is Euro USD, which reversing the image on the dollar. We're now kind of seeing this upward movement following that small retracement which took place the start of the week. Ultimately though, we've really not seen as significant a move on the dollar itself, but still, we've got some very important Eurozone data, ECB data coming out this week, and therefore definitely keep your eyes on Euro USD. And also, keep your eyes out to see whether price does react to this, key liquidity zone, which price has previously reacted to start of the week. So definitely keep your eyes on that zone. Next to talk about though is pound yen, which just made an insane move yesterday, as kind of over the past few days, ending off last week. We were talking about how the price of pound yen was kind of stalling out somewhat, consolidating, possibly distributing, but also possibly accumulating, as we were forming this kind of flag, this kind of, this small rally, but ultimately we weren't reflecting the same amount of, momentum, bullish momentum that we'd seen over the weeks previous. And therefore, we were kind of saying whether this was a sign that, momentum was lacking and potentially we were going to see a sell-off to the downside. Ultimately, though, we've seen the complete opposite of that, as price has now broken out of that key, kind of period of consolidation, and now price is sitting around the 207.82 level, which is of course a very key level, or basically a very bullish level. A massive move to the upside has played out, obviously. And as we do start off Thursday, it'll be interesting to see whether we can stay at those levels, or in fact that we now due somewhat of a retracement. But we'll have to wait and see. The way the market's been moving recently, it's hard to expect a retracement. But obviously, by the kind of what the textbook would say is a retracement is bound. But obviously, markets don't play out that way usually. So definitely keep your eyes on pound yen. Very interesting price action. Next to talk about though is Bitcoin. Which is continuing this range that we've spoken about that has formed over recent days and weeks. But ultimately, In yesterday's price action, we saw price move to the upside and react once again with this 50% Fibonacci retracement level and key liquidity zone. And the question is now whether over today we'll see this continuation of a sell-off to the downside, whether we'll see price sell-off and move once again to the bottom of this range that has formed, or in fact will we see price stay around this key liquidity zone on the upside and possibly even break once again up and back into the kind of $60,000 a Bitcoin level and higher. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which on the higher time frames, obviously it's harder to kind of decode gold at the moment just by the way that price is moving, but ultimately prices returned once again above this key liquidity zone that we've noted out. Prices once again broken out this period of consolidation and accumulation, and the question now is whether price will stay above and stay around those levels, or in fact and whether price will continue to the upside and possibly reach around those higher areas of liquidity and the $2,400 a gold level. So definitely keep your eyes on gold. Very interesting price action. That's all to talk about on gold though. Lastly to talk about is oil, which has sold off obviously over the course of last week and starting off this week, but over the course of yesterday has bounced off this lower level of liquidity. As I did kind of suspect, I did say that possibly this was just the market's finding oil's price equilibrium, as we had seen this kind of massive rally to the upside, and possibly this was just the market's pricing in the kind of actual data, the reality on the ground, maybe in the Middle East and that kind of thing, and that's why we've seen this sell-off take place, and therefore we can expect a kind of movement once again back to the upside from these lower levels of liquidity. And so it'd be interesting to see whether we'll break once again back above this key liquidity zone or stay within this range like we saw from the period of the 18th of June to the 27th of June. So definitely keep your eyes on oil. That's all to talk about on the chart. So lastly to talk about is the economic calendar, where I'm sorry to say, but we covered today's economic calendar in yesterday's morning market briefing due to the time issues. I kind of didn't check once again, and as a result we're covering the same economic calendar, but do not worry and definitely listen out for all this data once again. First, you're receiving the Aussie inflation expectations figure as well as the German inflation rate figure, and then followed by that we're receiving the British GDP figure and the British balance of trade and industrial production figure. Followed by that though we're receiving the US inflation rate figure and numerous Fed official speeches. That US inflation rate figure and German inflation rate figure though is of course the most important news of the day, and definitely listen out for those key pieces of data, as that will dramatically affect the euro obviously. So definitely listen out for those ones, and of course listen out for all the smaller pieces of data that I also noted. But that's what's about on the economic calendar. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.